Hello, and I'm Roy Zimmerhansl. I'm the host of Securities Lending Saturday, and today I'm going to be talking about my thoughts and comments on the Securities Lending Market Report recently issued by ISLA, edition number 16. So if you've read the report or you haven't read the report, or you're just interested to see what I think about the stats and what they're telling us, then this is the video for you. Hello, everyone. Welcome to Securities Lending Saturday. And today, as I said, I'm really excited about reviewing the latest data that was released in the Securities Lending Market Report from ISLA. It's the 16th edition. I was part of the ISLA board when we issued the first one. Look, I think it's been a tremendous help to improving understanding about the business. That's what I'm all about. So it's completely in line with my thinking, and they do a great job of it. And there's lots of great contributors to the report, the data providers, but also those that provide their thoughts, views, and their own analysis and take on the business. And let's just jump into that. I will now share the slide, which I'm sure all of you expect. Here's my slides. That's what we're going to be talking about today, my thoughts on the Securities Lending Market Report. This is what we've been talking about all the way along, quite a broad-ranging thing. We just finished a 3-video series or 3-weekend series on repos and securities lending as a final wrap-up. Today is a review of the ISLA report. And next week, I've touched on this many times through the various episodes, but a couple of people wrote to me asking if I could specifically focus on ETFs and securities lending, and I plan on doing that. For those of you that are interested in getting copies of the slides, we've had a little bit of a technical glitch in the last couple of weeks, but I hope to get that back on track this week. If you're interested in getting these slides and the slides from the previous series, just go to this bit.ly / SL fundamentals, sign up there, and we'll get them out to you just as soon as we can. Okay, don't forget, if you want to have me say hello to you, just drop something into the chat that actually says you're here live and watching, and I'll say hello to you. And let's get going. Right, quite a lot to cover today. I think this will be a slightly longer episode than the last couple, which have been about half an hour, just over 30 minutes, but we'll see how we go. I'm going to talk about the global trends that ISLA has spotted, a little bit about the overall balances and what that actually means. Then we'll move on to the different asset segments, which are government bonds and equities. We'll take a look at collateral and some of the trends there. And then we'll touch on a couple of the closing points that ISLA mentioned in their SFTR. We'll see if we can draw any conclusions from the information that's been produced, and a looming issue that gets ever bigger as time goes on, which is legal entity identifiers, LEIs. I have very strong views about LEIs. I have very strong views about most things, but there you go. Michelle, you're first one to say hello, so I'll say hello to you. Thanks for joining me today. This is what we're going to be talking about. You can, of course, go to the ISLA website, and I'm sure you can download the report there, or you can use this bit.ly link that I've set up. It takes you to the same place. It's the ISLA report itself. Okay, have a read of that. And if you have your own comments, thoughts, and views, either put them in the video comments after I produce the video, which will be Sunday, the 20th of March, it'll be up, and put your comments, questions, and thoughts into the community channel on the YouTube page, which I'm putting stuff on every day now. There's something about securities lending that I think will be relevant to you. So go to that community page. The community page was made available because of you. 500 subscribers made it possible for me to have the community page enabled. I think it's a great location for sharing of information, questions, and comments and thoughts. So look, if you like this video, please give it a thumbs up or on whatever platform you're watching it on. If you think it's helpful to you, hit the subscribe button and share it with friends. I know quite a lot of the subscribers that we got are due directly to people sharing that. So I really appreciate that. Just before I get on with the rest of the slides, just a quick thing. We have been doing podcast video casts for coming up to 2 years. The start of June will be 2 years that I've been doing them. I haven't done one for a little while. It's been a crazy hectic year this year work-wise, so I haven't had a chance to actually get them out and produced. I've got a couple more that I've recorded, but this one, I really enjoyed this one. It was with Boaz Yari from ShareGain. It's had quite a lot of good feedback, quite a lot of views already. I really encourage you to take a look and listen about this capital markets, infrastructure, fintech that is challenging and disrupting the securities lending business. I think change is good. I don't care where the change comes from, but I think we constantly need to be reinventing ourselves. And if we don't do it ourselves, then people will force us to do that. ShareGain is part of that movement. So have a look at that. That's on the YouTube channel. It's in the interviews with fintechs playlist, or you can just go onto YouTube and look up ShareGain. I'm sure you'll be able to see it. That's the thumbnail that you'll see. Right. First part, global trends. I guess if we look at the first thing, what I want to do is just draw your attention to these three sets of metrics, right? And of course, everything I've taken today is all from the ISLA report itself. There's one exception where I get information from the ISLA website, and I've identified that. Otherwise, all of these are just straight lift outs of the diagrams or the charts or the data that's in there. So the first bit, the volume of securities available for loan moved from 28 trillion to 32 trillion in the final 6 months of 2021. Now, they always put a useful indicator here, which is the S&P index, because of course, some of that growth might be from new entrants to the market. Some of that growth might be from the just the inflation within the index itself. So if the index goes up 5% and the amount on loan goes up 5%, then you can say basically that's still flat because it's just been index inflation. Now, of course, they've only used the S&P 500 index there, so it's not completely representative of the whole world. You also get questions about base currencies because, of course, the S&P, this is calculated for a domestic investor in dollars, whereas these figures are given in euro. But look, this is up more or less 10%, and this is up 14%. So I think that shows strong growth in terms of supply, which suggests to me there's new entrants into the market that came in the last 6 months. Now, if you look at the amount on loan, of course, that's only gone up by roughly 3%. And that's based on trading activity, that's based on the market conditions. And don't forget, as I always warn you, end of year positioning by banks and market participants means that the final day of the year is not necessarily always representative of the truth. And so we'll look at some of the numbers to see what happened actually with the figures in, say, the last quarter of the year. Did they trend up or did they trend down? So that's a little bit behind. And the growth of the overall supply side, though, is ahead of the index. So I think that's useful. This is, of course, the most important statistic because we do this business to make money. The securities lending revenues, as reported by DataLend, the lender to borrower side or broker side, is up pretty dramatically, right? So that's about 20% roughly. And that's fantastic. Maybe not such a surprise given that Korea came back online. So that was good news. And there was more volatility in the market, which I'll talk about in a second. So not a surprise. The bit that will surprise you maybe is just the degree to which the North American market had quite a robust half of the year. and what that actually has played out to be. So look, revenue's up. That's always a good thing. Not quite at the $10 billion bogey, which I talk about as being the indicative rough figure that securities lending should be contributing every year. And then the final point here is the VIX was up a little bit, but as I have said many times, volatility is good for securities lending opportunity. Volatility means that there's divergence in trading activity and different perspectives, different points of view, different highs, lows. It impacts a divergence not only from maybe other stocks in the market or other regions, but from the historical norms of where that individual stock has traded. So again, in the late 90s, as a personal account, I took 3 stocks and I just traded them personally, day traded them. The reality is you get to know how stocks trade. And if things start going out of whack from their history and you're on top of it, there's good opportunities to make money. Okay, so all of these are good trends, a little bit of low expectation, maybe growth in the total amount on loan. So those are the global trends. I'll just clear my throat. Excuse me. Sorry. Let me get a drink. In fact, let me get a drink and we will quickly go to the full screen. Not an advert for Coca-Cola, right? This is not an ad. It's a personal love of the drink myself, Coke Zero. My go-to drink, except when I'm going to the gym. Right, back to it. The overall balances trend, look, I think this is really important. As I said, ISLA's been producing this. This is the 16th edition of the report. So that goes back to 2014. As you can see, every year end is the dark blue line, and the half year, the interim period, is the light blue bar. So you can see continuous upward growth. Now, look, this hasn't been adjusted for inflation or currency change or anything, but that's a definite upward trend. It seems pretty obvious and clear. Hopefully the arrow makes it a little bit more clear. This is positive. This just says that it's becoming more pervasive, more active again, and heading definitely in the right direction. 2.7 trillion roughly euro outstanding on loan. Okay, very strong, continuous trend. I'm going to turn to government bonds now, and we'll look at this in the 3 components, 3 regional components. This is European government bonds. So you can see over the course of 2021, government bond activity has gone up pretty continuously. You get slight ebbs, but definitely getting stronger. So this is a continuation. Remember, you're looking at the right hand scale for the on loan value. So this dotted line, right hand scale, you can see that you're at basically roughly 375 billion euro of European government bonds on loan. Okay. Also, interestingly, just supply again over the course of the year, that's pretty steady, continuous growth. If we turn to U.S. government bonds, a much more clearly defined sort of growth, I think you'll find that's just the inflation value of those assets. But the interesting thing for me here is you see this kind of flat pattern through the middle part of the year, say Q2, Q3. What that actually says is the demand for the government bonds was continuous. That's more likely to be a steady demand for collateral usage. But this bit in the final quarter, as you get into the year end, so Q4 2021, that's when we started having real sort of action in terms of interest rate rise expectations. And now all of a sudden, I look at this and it'll be interesting to see the next trend. The reality is, I think this portends very well for the business, because this says to me that there's people actually trading the bonds, shorting maybe the short end of the bonds, expecting interest rates to rise, which they have again this week. And so you'd be shorting the bonds and going out longer duration and picking up a spread there. So this is trading activity. Where there's trading activity, people will start competing for bonds. That will start impacting the supply, and you get a real market again. And it's not just collateral transformation trades driving the revenues. this is actually quite a positive outcome in my view. Finally, you get Asian government bonds. The majority of this is going to be Japanese government bonds, and you can see that's essentially been flat from the beginning of the year to the end of the year, with a little bit of movement above there. But these are really small figures, right? So the amount you're talking about, less than 130 billion, but even when it peaked, that's 132. So although it looks like it's a peak, it's because the scale is very, very small. So that 130 billion, remember I said that the European ones was more 370 billion euro, and of course the US bonds. So the biggest market, and a little bit short of $1 trillion still, but getting pretty close to $1 trillion on loan at its peak, and then at the end of the year not falling off too far from that. Look, if that carries on, I'd expect to see it break through the trillion figure, and we get into a proper market again, the good old days where people traded them, not just looked at them for collateral transformation, which is obviously an important trend or important activity. Collateral is getting ever more important, not just to securities finance, but to all kinds of activity across any kind of trading exposures where you want collateral to minimize your counterparty risk exposure. So government bonds basically up, and flat, but overall pretty strong story there. Equities, if we hold on, there we go. Let me just give you the overview slide that they put up first. So you can see that North America, quite a strong growth. So this is year over year. This is the end of the year 2020, end of the year 2021. So this, any kind of window dressing or restructuring of books will affect both year ends equally. So the US up pretty strongly. That's about sort of 10%. Asia Pacific back. I have to say I'm a little bit surprised that it's not bigger because you had the return of Korea, and to an extent there's some Malaysian impact, but Korea is a massive market. I think, Japan, Hong Kong had a pretty good year, so maybe that's been muted a little bit, the impact of Korea, because the figures were already high, and Europe muddling along as European equity markets have continued to do since the global financial crisis. In my view, Europe still has a lot of potential, but that remains unrealized potential. So let's look at it. These are end of year snapshots. Let's look at the activity throughout the year. Okay, so this is Europe. You effectively see that it started just a little bit over 100. Remember, you're talking about the right-hand scale, 150 billion euro there, and it's 160, say, and about the same figure at the end of the year, right? You get the normal substitutions for lower dividend rates over dividend season in Europe. This is substituting one lender that suffers very little withholding tax for another lender that suffers more withholding tax. It's effectively a tax efficiency game or a cost efficiency game by borrowers who substitute this out. This is not the same as the bad old days, as they might be called, where there was dividend arbitrage trading activity going on. Europe and really all countries are aware of that today. There's been anti-avoidance legislation in place in some countries since the beginning of this century. And of course, there's ongoing legal cases about that. But look, this is legitimate financing to save money opportunities. So that's Europe, as I said, muddling along. Hold on. There we go. North America, the North American market, as I said, really surprising. So this is just over 500 billion and going up to about 600 billion, roughly a 10% or a little bit more than that growth. Look, that's just trading activity, right? That's where your volatility comes into it. And again, this was last year, so this doesn't take into account any of the volatility this year. It doesn't look at the impact of what's happening in Russia and the Ukraine. Maybe there's some anticipation of that, but really nothing that would have obviously been impacting the markets at that stage. So look, this is legitimate trading activity, increasing volumes, To an extent. The US obviously most countries had more new issuance last year than they did in the COVID year, and some more takeovers and acquisitions in the second half of the year. And I think the ISLA report has a pretty good write-up in terms of the activity in there. So I encourage you to read that. Quick hello to Fanny. Always good to have you with us, Fanny. Thanks for joining us again and appreciate your kind comments. So that's North America. Now, for some reason, oversight or space, or I don't know what it is, I didn't see a similar chart for Asia. So you have Europe and North America. I didn't see an Asian chart in there, but you can see that the Asia Pacific region was up. And the reality is that most of those markets are higher average fee generating markets. So, that growth by percentage will represent a higher percentage growth, I reckon, in terms of actual revenues earned for lenders. So that's a really important thing. If we see Asia growing by that kind of clip every year, that's always a good thing. But no ISLA chart in there that I could see for Asian equity markets to look at the trends over the year. Korea came back online in May. That had an impact there. Would have impacted revenues maybe more than just simple balances, because there's quite a lot of specials in Korea, always have been. Uli, great to see you, man. We haven't spoken in ages, but listen, I appreciate you stopping by, and again, thanks for the comments. Really great to have you here. So that's equities. There's some interesting comments on collateral here. We're going to quickly look at it's just a quick snapshot from the tri-party providers that provide this data to ISLA. They consolidate it and deliver it this way. We just look at the collateral, and those of you that looked at the securities lending versus repo video from last week, you'll recognize a couple of these charts. So you see again what we see about the government bonds being used in tri-party in Europe, mostly European, so 48% European. This 28% is Asia. And so you're talking about largely Japanese government bonds, right? So there's a big chunk of JGBs being used as collateral here. There's a lot of debate about JGBs. They mention it in the ISLA report as to whether it's a tier 1 or tier 2 high quality liquid asset. Like, the reality is, I've always felt very comfortable taking JGBs as collateral based on the nature of who owns them and the government activity in terms of financing and buying them and intervening in the market. I think they're good quality assets, but what I think doesn't matter. It's about what works for you and your organization. But look, JGBs have a big impact, and the truth is that if you are able to take that as collateral, that will help you generate more money or keep the money you're already making. It's a question whether that money and that market share is worth it from a risk point of view in your perspective, and you need to decide that. I can help you and give you my thoughts, but it's up to you. Then you see North America as relatively small given the size of issuance from the US, but that's because the bonds are being used domestically in the US, right? If there's supply that is useful supply, it'll get snapped up there. So this is really a subset of the supply, and then you got sort of other markets outside that. If you look at the type overall, so this is just looking, the top chart is just looking at government bonds in tri-party. If you look at the entire sphere and say, what type of asset is it? Again, you'll see dominated by government bonds. So this 49% is what breaks down into this. Corporate bonds, always less than 10%. Corporate bonds, again, I could probably do a show on corporate bonds as collateral, which I won't do, unless you want it. Tell me if you want that. But equities has always been an important component of European tri-party collateral. It's one of the things that makes it more effective and cheaper to finance prime brokerage businesses here, because of the ability to deploy the equities you use either as lendable assets or as financeable collateral. So that just gives you a little bit of perspective on it. If you go to the next slide, that's not the next. I'm having real trouble with the slides today. So this data here focuses on pledge collateral. Just a quick recap on that. Normally, in a securities lending transaction, First of all, the loaned assets are a transfer of title. So the lender transfers the legal title to the borrower. The borrower is free to use that security, that borrowed security, in whatever way is legal and they are interested in doing. So that's the lending side of it. The collateral also typically in a European or a non-US structure is a transfer of title of collateral as well. And so theoretically, the lender can do anything they want with the collateral. Typically, they don't do anything with it because a borrower will have the right to substitute that collateral and get it back. And if you, as the lender, have rehypothecated or reused the collateral, then you're now dependent on another party to get that collateral back to you. So most lenders don't try to leverage up on the returns that they get from their collateral. They just sit onto it as a safety net. Where it's securities involved. Cash obviously is a different story. So that's the typical model. Transfer of title on loaned asset, transfer of title on the collateral. Pledge collateral, on the other hand, has been around for a few years now in the non-US market. And the reality is that data reporting, this comes from the trade repositories. So that's the various trade repositories identified up here. And it now categorizes collateral. So it's pledge collateral. Now, what a pledge does is the pledge still moves the collateral out of the borrower's account, but into another account, which effectively is still in its own name, but it's held to the order of the lender, which says, lender, you can't do anything with this because you don't own this at this stage, but you've got access to it. In the event of a default from the borrower, then you can take control of it and do as you please with it. The advantage there, of course, is that collateral hasn't left the balance sheet of the borrower. It's a kind of a contingent risk for them. If they default, then those assets, of course, would be snapped up. But the good news there is that's much more cost effective for them because those assets haven't left their organization. And that, in theory, should translate into more demand from lenders that are willing to take pledge collateral instead of transfer of title collateral. Now, this looks like we have quite a lot of fluctuation up and down, but it's downward trending. We ended the year in the same place in the UK, and in the rest of the EU, it actually trended downwards. Look, don't draw any conclusions from this. I'm not going to draw any conclusions. This is such a tiny data set that it's interesting, but it's more interesting from an observational perspective. Let's watch how this plays out over the coming months and years. I refuse to believe that people are less interested in doing pledge collateral. There are many different factors that could be having an impact on this, but I thought it would be it's good for ISLA to highlight this, and it'll be good for us to continue to watch it. The final piece, and again, I showed this last week, and this came from the ISLA website directly, not from the report itself. This issue of non-cash collateral and cash collateral. Remember, I've been talking about interest rates as being the great savior potentially for big time revenues to the business. As interest rates rise, there's more potential return from reinvestment of cash collateral. That should play out into higher revenues overall. But it'll be interesting to watch this mix to see whether this will change. So my expectation is that the amount of cash collateral that's used will go up. But I also think that there will be trades that become profitable at a higher interest rate market or environment than they are today. So I think that the overall pool of lending activity, the overall balances will go up, and that cash will represent a bigger proportion of the total collateral pool, but not at the expense of non-cash collateral. I expect to see both of them go up, cash going up faster. We'll mark this date in the calendar and we'll revisit it to see whether or not I'm right. Okay, going to turn to SFTR reporting. So again, there's two aspects to it that ISLA has reported on. Again, interesting, but only interesting as a quick snapshot. Remember, this is all sort of new data. So don't draw too many conclusions from anything that you see in this graph or the next one. What I've the red line is just the 50% line. So the top line is loan values from UK entities, and the blue line, the blue bars are for non-UK European entities. And so you can see, if you look at the overall edge of the business, it looks like there's more activity growing as the year has gone on by UK entities at the expense of European ones. The snapshot, see what happens. There's all kinds of potential answers for that, but don't make any decisions based on what you're seeing with that. And then similarly, single-sided reporting. If there's two EU entities, or entities that are captured by the European or EU UK regulations, if there's two parties that are captured by that, they both have to report, and they know it's matched, and off you go. This looks at, and that's an important component. This looks at the single-sided reporting. That means where there's only one entity, either in the UK or elsewhere in the EU, that they're dealing with a counterparty outside of Europe and the UK. Now, that's still the majority of the business, because the biggest pools of lenders still remain in the US, but there's big pools elsewhere. But the majority of the assets are sourced from outside already. So this represents that reporting, because the only entity that's captured, of course, is the entity that's captured. So they're required to report. Their foreign counterparty may not be required to report, and so there's single-sided activity. So what this basically says, if you look at it in a different way, what it really means is, are you dealing primarily with European entities or non-European entities that aren't captured by the regulations? And what you can see is a shift, which looks pretty dramatic. Again, it's a scale. It's about a 5 to 6% change for EU entities that are dealing with entities that aren't captured by the regulations. So they're looking at it the other way. You might say that they are trading with more European entities, or more focused on European entities. Still, the majority would be sourced from these sorts of entities, but it's a slight downward trend. We'll see if that continues. The UK is more or less flat to a little bit down. So that means effectively they're borrowing from, they're lending or borrowing, depending on which side of the transaction you're on. You're basically dealing with the same mix of counterparties that you were. The Europeans look like it's a little bit of a shift, but nothing on its own yet. If we had another 6 months or another year of data, we'll see if that continues, and then we can start drawing some conclusions from. But interesting perspective anyway, in terms of the reporting now, whether that's the overall activity or where it's being sourced from. Okay, just watch those for now. The final point I'm going to come across is legal entity identifiers. So a legal entity identifier is any issuer of bond or a stock in the market, whether government, corporate thing, they will have, and investors, they will have what's called the legal entity identifier. So the idea of an LEI is to make a particular issuer or investor identifiable in every jurisdiction. So if you have the LEI, you will know who that entity is. And there was a requirement from the SFTR regulations that LEIs be a reportable field on every transaction, so that the regulators could see the activity and which securities are in. Now, ISLA and some of the other associations have done some work. They found that from their members, there were 55,000 unique ISINs. So just to be clear, if one company issued two bonds, they would have two ISINs, but there would be one legal entity identifier identifying that issuer. Okay, so just so you understand. And again, typically, if a firm has one bond in the market, they probably got more than one bond in the market. They'll do different financings at different points of time. Bonds will mature. So the question is, of those 55,000, how many of them were actually active? What they found is 55,000 unique ISINs. There were about 35,000 different issuers. So you can see that there's quite a lot of issuers that have more than one issue in the market. An example of that might be, though, a company that has one bond in issue and has an equity in issue. That's already two, right? That's two issues from one LEI. Now, the LEI is required data for EU issuers. So on all of the SFTR reporting that goes on, the LEI has to be in there. And the idea that the European Union regulations suggest under SFTR is that LEIs will also be mandatory for non-EU issuers for reporting. Now, the thing is, the responsibility, so the only entity that can take action to get an LEI is the entity itself. They have to apply to get it. I did that for one of my clients last year. It's simple, easy, and cheap. But the companies, I'm sure many of these issuers that haven't done it yet, and again, there were big numbers from the US, Japan, Korea, but it's really a problem everywhere. What's their incentive? I can't see what their incentive is to do an LEI, except that they are good global corporate citizen. And I'm not certain that's always highest on company agendas. And securities lenders, repo market participants, stock and bond market participants, I don't think that they have necessarily a whole lot of clout with these companies to generate these LEIs. So I've always thought it's a really odd requirement for SFTR to place on this market when this market doesn't have any control over it. But look, again, no one cares about my opinion about this particular regulation, unless you do, in which case you've got great decision making on what's important. So I think this really throws up two questions that ISLA has identified in the report. One is, with issues where there isn't an LEI, it's not available, will that actually become untradeable? The fact that you can't report it, will that mean that those assets can't be traded? I think that's a big problem, because that affects, obviously, secondary market liquidity pretty dramatically, potentially. And I find that really bizarre, because it's a requirement on the securities finance markets, which really is outside of their control again. So regulators trying to search for more information and more data, presumably to manage markets more efficiently, may end up causing illiquidity in the markets that they regulate. So I think there's a disconnect here somewhere, which hopefully will become acknowledged, accepted, and acted on appropriately. And then there's a question on what the impact is on the SFTR validations. Will every regulator? So let me take a step back. SFTR, your reporting goes to your local regulator, whoever your regulator is. And if they have different interpretations of what a validation of a trade because of LEIs means, in terms of, they might interpret it differently. They might have different starting times when they say, we're going to do it from this date, or we're going to do it from that date, or we're going to take a different perspective. All of that throws out potential issues as far as a level playing field for market participants. And again, so I think, ISLA and the various ISLA working groups are working pretty hard on both of those issues. Again, let me just say, I think it's really bizarre that it's fallen to the trade associations to sort this out when it's actually about the companies themselves. Okay, so that's kind of summary. Just a quick recap. Global trends: do we see a growth in the supply available for markets, a definite growth in revenue? And although I put a downward arrow for the outstanding loan balances, what I'm saying is that trend of growth has been below the S&P. So it's still up. I could have put a green arrow in that, but I just want to make the point that relative to the S&P index, the growth in outstanding loan balances hasn't been what you would expect. However, what we've seen since the start of the ISLA reports, we see a 6-year continuous growth in the business overall. That's obviously a positive trend. Government bonds has pretty high utilization of the available bonds, and growth is clear, but I expect to have even better growth because of interest rate trading opportunities. Equities, we see North American growth, not applicable. North American growth, it surprised me a little bit until I started thinking about it. We see some European growth, not the greatest, but we see massive recovery from and reinstatement of markets in Asia. I think that's super positive. The collateral, government bonds, of course, are important. A little bit of a surprise for the pledge activity. So we see some questions for the future, but this is one to watch. SFTR, maybe these are signs of a realignment of business or where activity is carried out. I don't think so. I think we still need to see more data. And then LEIs, potentially a big looming issue. So that's it for today. Next week, as I said, we're going to be talking about ETFs and securities lending. Lots to dig into there, an asset class that is growing and growing, and one that I think is important today will be even more closely intertwined as the years go on, and ETFs will become even more important. So, look, that's it. That's it for me today. I hope you found this interesting. Again, go back and look at these and report yourself. If you have questions, comments, or things you want to share, put it in the community or put it in the comments to this video. Thanks very much for joining me. Have a great Saturday. Have a great weekend. Have a great week. And I look forward to catching you next Saturday.